Welcome to the G360 Wealth Podcast. Today's guest is Kyle Casserino, who's a vice president and planning consultant for Fidelity Charitable. Kyle has more than 10 years of experience working with financial advisors and Fidelity customers, implementing and executing charitable giving strategies. In this episode, we're going to be covering the Donor Advised Fund. Kyle, welcome to the podcast. Thanks so much for being here.
Yeah, Sam, thanks for having me. Such a high endorsement. Looking forward to
it. Well, it's well earned. Let's start off the episode here. We're going to be covering donor advised funds, but let's start off with the highest level. What's Fidelity Charitable?
Yeah, so we have been around since 1991, so about 24 years. I started here about 12 years ago, and when I started, Fidelity Charitable was basically a startup at Fidelity. We had 70 employees, 50,000 donors. Took us 22 years to get there almost. So really, this is amplified a lot in the last 12. Now, donor advised funds at a high level, these are charitable giving vehicles that help folks separate the timing of their tax deductions when they actually have to give the money to charity. Fidelity Charitable happens to be the first national donor advised fund. We're also the largest public charity in the U.S. We passed the United Way about 8 years ago in terms of money that comes in. And then about 7 years ago, we passed the Bill and Melinda Gates Foundation as the largest grant makers. So we work with about 400,000 donors at this point.
Wow, that is incredible. And, as we work closely with Fidelity, we know that if they execute on something, they're going to do it well and be the biggest and the best. Can you talk to us about what is a donor advised fund? For many of our listeners, they have donor advised funds with Fidelity. Many of them are thinking about them. But what exactly is a donor advised fund? And you talk through us at a high level, and then we can drill a little deeper.
Yeah. So how these accounts work is essentially it helps a client, whether it's an individual or a company, separate the timing of their tax benefits with when they actually have to give the money out to their favorite charities, right? So all the tax benefits happen when you fund the account. The assets inside the account grow tax-free outside of the donor's estate. And then the donor uses like a charitable wallet. They send the money to their favorite nonprofits really at their own pace and their own time.
Got it. So for those listening out there, it might sound complex to set up one of these accounts. Can you walk through how do you even set up one of these accounts? Do you have to have $1 billion or how does that work?
It's funny. It's so easy to set up these accounts. I mean, a lot of folks do it online or with their financial advisors. They'll open it in really one day. So super simple. This isn't an entity where you're getting a new tax ID number or working with legal counsel to draft documents. This is really just an online account opening process. And then the donor makes a contribution to Fidelity Charitable. And to your point, it's when I first started, I felt the same way. I was like, well, if you're using this, you must have to be giving away 6 or 7 figures a year. But the crazy thing is that donor advised funds, the median account size at Fidelity Charitable is a little bit over $21,000. Our average is just over $26,000. So most accounts, 60% of them are under $26,000. So most people that are using this are really your average everyday Americans that are giving even just a few $1,000s a year to charity.
Yeah, that's incredible. And I think one of the most powerful things about the donor advised fund is how it amplifies and encourages investors to give and give to the charities that mean the most to them. When somebody sets this up, just for clarity, do they need a lawyer to set up, the Diarbakerly Family Foundation, or does Fidelity do all that legwork on their end?
We do the legwork on our end, and it's I won't bore you with the details, but essentially it's just an account under Fidelity Charitable's tax ID. So the donor is not having to work with legal counsel like they would on a foundation, for example, to get a new tax ID number and file with the IRS. It's simply a donor advised fund account under Fidelity Charitable's entity, which is a 501c3, and that's why donors get all the tax benefits on the way in.
Got it. So let's talk about how do you fund this account? Can you put cash in? Can you put an appreciated stock in? Can you put a famous painting you have in your living room in? What goes in these accounts, and what happens when you put the money in?
Yeah, I always tell folks is that cash, it's not even really a hot take, but cash is just a horrible asset to give to charity. Right? Because what do you have to do to give cash? You either have to earn it as income and pay income tax on it, or you have to sell an appreciated asset and pay capital gains. That's what it costs somebody to actually give cash to charity. So a majority, over 70% of the contributions that we get in every year are of the appreciated asset variety. So folks that have hold positions for a year or more, so they do have to be long-term in nature, but that have appreciation in them. And the IRS really incentivizes you to do this. Reason being is that there's really two tax benefits. So the donor gets a tax deduction based on the fair market value price of that asset today, whenever they contribute it into the donor advised fund. And then they eliminate the capital gains tax on the growth. So the easiest example of this is the person that bought Apple for 20K and now it's worth
You
50.
beat me. You beat me to Apple. That's the example I was going to use. You bought it 20 years ago for a bag of marbles, and now it's worth $1 million.
Right. And it's like, okay, you look at that position all the time in your portfolio, and you're like, what do we do with this thing? Right. If we sell it, we know we're going to get crushed in capital gains taxes. So for folks that are philanthropically minded, you can give that asset to a donor advised fund or to your favorite charity and avoid the capital gains. And the great thing is that inside the donor advised fund, those shares can be sold tax free. So now in your example, that donor has $1 million to give to their favorite charity and $1 million deduction and is not paying the capital gains tax on that huge growth.
Wow. So you could potentially buy Apple, 15, 20 years ago, and let's just use anecdotal numbers here. You bought it for 10,000, it's worth $500,000 now. You can avoid that $490,000 of realized capital long-term gain, get the fair market value deduction, and then what happens when it goes into the donor advised fund? Now you have $500,000 in your Fidelity Family Foundation that's earmarked for your family. What happens next? Do you have to give that all out?
It's really at the donor's pace. A lot of folks, I'll just give you a sense of people that use this, is that a lot of people use this account as an administrative tool, right? Where it's like, that's the classic individual that's giving to maybe 5, 10, 20 different charities every year. But on April, October, they go to their CPA with a stack like this of all these tax receipts. And did we send them a wire? Did we write them a check? Did we send shares of Apple to this charity? So people will just use the donor advised fund and say, hey, I give $50,000 a year to charity. I'm just going to put that amount in the account and then grant out the full balance. But at tax time, I have one receipt to give to my CPA. So it's really, that's more of the administrative user of the donor advised fund. But most people think about this longer term and are just saying, hey, I have a huge income year or I'm getting close to retirement and this is the right time to do it. And the idea is basically you're prepaying your giving for years and years down the road in a lot of those examples.
Yeah, and we see the donor advised fund work really well with corporate executives or business owners who are going to have a big tax year, and they know they want to give $10,000, $50,000 a year, whatever the number may be, to charity, but they need that income tax deduction in that year. The powerful thing about the donor advised fund is you can reinvest those proceeds, right? You put that $500,000 of Apple proceeds in now you can buy something else that everybody in New England bought 20 years ago, maybe the Fidelity Contra Fund, that's also gone up a bajillion percent. And right, there's no mandate for giving in that. Is that correct? You can, as of right now, you can let that donor advised fund grow tax free.
That's right. Yeah. A lot of folks always, ask the question about private foundations, right? Because a lot of folks realize that private foundations have to send out 5% a year. Those minimums don't apply in donor advised funds. So there is no minimum annual dollar value or percentage that has to leave the account, but we do encourage donors to be active grantors. I mean, we really don't want folks sitting on these funds and never giving to charity with them. So we do incentivize people have to do at least one grant every other year, but it's a pretty low barrier.
Got it. So if somebody has a giving mandate as part of their financial plan, it's important for them to work with their financial advisor to do some modeling on what you should contribute, what your expected growth rates are, and then what your distribution should be per year. Is that how folks effectively use these tools?
I think so. I mean, it's funny because folks always ask about the prescription behind the donor advised fund. Like, how do people use these? And it's so different, right? I mean, I have a lot of folks that will just give out the interest every year, where they'll say, hey, the S&P was up 23% last year. I'll give out whatever growth in the account, but I do want to maintain principal. And maybe in down years, they're not giving. Other folks have very regimented patterns of giving where they're giving to their religious house of worship every month or their alma mater or their hospital down the street. And that will not change regardless of market performance. And other folks are like, listen, my CPA told me I should do this year, but I really haven't focused too much on identifying charities or doing that. So my plan is I'll grow the account. And then when I maybe retire after I start my next business, that's when we'll start to focus on it a lot more.
Got it. And let's talk about the technology behind the Fidelity Donor Advised Fund. So you mentioned, perhaps giving your house of worship or your alma mater. Can you talk about the technology that Fidelity has, right? So we can automate this. You don't have to think about it. You don't have to get your checkbook out every month. I think that's a really powerful advantage that Fidelity has over its peer group in the donor advised fund space.
Yeah, I would agree. I think it's really interesting because a lot of folks are so used to writing checks to charities or using their credit card online or things like that. And it becomes a very administrative process. But what we've done is essentially streamline this to be all online. So a lot of folks, you'll see it on Fidelity.com. If you have other Fidelity accounts, just another account on the Fidelity software. Same with the mobile app. Because a lot of folks like to go to charity events and say, I usually would write a check to them, but instead this time I have this donor advised fund. Well, I'll just use the app and send $1,000 and show the charity person, I'll send them a screenshot, and $5,000 is on its way for my Fidelity charitable account. So the technology is great in the sense that it makes it really interactive and easy to do it. But also the idea is that, hey, you submit a grant today, you probably want those funds to go out at least tomorrow, right? So our idea is direct feed from the IRS in terms of our charities in the database, updated a couple times a month to the point where, hey, you go online, you submit a grant to a charity, it could be in their bank account by the following business day, which is what we pride ourselves on.
Wow. Yeah. And as I'm proud to be part of the Fidelity Donor Advised Fund family, my wife and I, it is probably under 30 seconds once you're comfortable with the platform, from going in your phone, doing Face ID, putting the charity in, putting the memo in, and then the check's out in 2 days. And it's astonishing how many organizations are on the digital platform with Fidelity. And you guys do a really great job of articulating that with a nice link right next to them. So it just goes right through to them.
Yeah, which at first was a COVID exercise for us, right? Because all these charities were not at their physical locations anymore. We're sending all these checks out. None of them are getting cashed. So we proactively reached out to all these organizations, especially the high volume ones. And we're like, hey, listen, why don't we just send ACHs to you every day, right, into your bank account? We'll provide you the breakdown on email, which a lot of charities love. And now it just streamlines the process. And at the end of the day, donors want to get funds from their account into the charity's bank account, and checks are a thing of the past. We're trying to get funds to charities so that they can use them and deploy them towards their programs.
Why don't you send me ACHs every day? That doesn't sound like something you can argue with to me.
Right.
Can we talk about what can you put in the donor advised fund? Because Fidelity has interesting capacity. Can you maybe anecdotally share a complex receipt of assets that Fidelity was able to take?
Yeah. So the theme of today's conversation is a lot about giving the right asset at the right time. Okay. So what's easy is to give cash, right? Charities make it easy to give cash. You can just go online and use your credit card or your debit card. It's easy. But those are the worst assets you can give, as we talked about before. So what's best to give is the asset in your portfolio that's the highest percentage growth. Okay. So held for a year or more, but has, in terms of percentage points, the highest growth. Now, it's easy to look in your investment account and say, okay, my Apple stock's up 500%. That's it. But what a lot of people realize is that might not be the best asset to give in their portfolio, because especially when you talk about folks like business owners, right? They started their company, and typically their basis or their original investment in the company is close to zero, if not zero. So when that person sells their company, they're paying capital gains tax on essentially the sale price. So those are great assets to give because A, you have a zero basis. You don't have to pay the capital gains on what you gift. You'll get a tax deduction in a super high income year. And even better than those two is that you actually get the equity out of your ownership pre-sale. So the easy example I always tell folks is, okay, you started your company. Now you have an offer for $10 million to sell it. A lot of times we get the call from the CPA after, and they're like, hey, we did the math. The client should really give away $1 million to offset this income. Okay. If you do that after tax, now you get $1 million deduction on a $10 million event. You do the same thing pre-tax. Before you sell the company, you give the private shares. Now you get $1 million tax deduction on a $9 million event, and then don't have to pay the capital gains on that $1 million of growth there. So hugely beneficial. A lot of it has to do with private business interests. We do a lot of work with crypto as well. We just, like I said, the asset with the highest percentage growth in your portfolio. The one area that we don't really do a lot of work on is tangible personal property. You actually mentioned it before about like your artwork in your living room, or that collectible car in your driveway. It's called the related use clause, is what the IRS classifies it as. And they basically say that in order to get the fair market value tax deduction, you have to give tangible personal property to a charity that has the asset built into its mission. Okay. You can only deduct your cost basis if you give that same asset to a donor advised fund. So for folks like that, like you're better off finding a museum or a charity that focuses on cars or hospitals or things like that would actually display that artwork, for example. That would be the better charity to give it to.
Understood. So high growth assets like Bitcoin, maybe some private equity interest, business interest, those Fidelity has the infrastructure, architecture, and client service team to accept and then ultimately put into your donor advised fund.
Yeah, exactly. I mean, we actually have five in-house attorneys that will do these transactions all day, every day when it comes to private companies. Actually, last year we took in 400 companies,
Wow,
which is more than one a day. And that goes to show you just the scale here. It's about $2.5 billion of inflows for us every year.
that's fantastic. And how does that work for a client? If you're a customer of Fidelity, do you have to pay a fee for that? Or how does that work on the donor advised fund side?
So we do charge an administrative fee on the account that starts at 0.6% on the first 500K, but there is no transaction cost for things like what we just talked about, right? Like our legal team, the work that they'll do, and we've kind of templated this whole process from start to finish. But yeah, there's no transaction fee. So that 0.6% in the first 500K, which is our first tier, obviously as the account value grows, that percentage becomes less and less. But yeah, there's no transaction cost. So that's the donor that gives out 100 grants to any charity that puts anything in the mail for them, or somebody that doesn't even use their account at all. They still have that same fee.
Wow, so incredibly low cost, incredibly easy. Seems like a no-brainer for those who give. Obviously, on the podcast, we're going to cover this is only one arrow in the giving quiver, right? There's CLATs, there's CRUSTs, there's family foundations. Each family, each client is going to have a different need. What we've found, though, is the donor advised fund is really a great one-stop shop for most people. Let's talk about investing flexibility, right? So there's a preset menu of investment options, but if you're working with an advisor like Generation Capital, is there even more flexibility for advisor managed accounts?
There is. So assuming a donor funds their account with over $100,000, they have the ability to have their investment advisor on file and create a portfolio with the donor advised fund assets, which I think, candidly, our pools are great. They're just a lot of folks outgrow them. I mean, I think it's fine if you have a $20,000 account and you want to put it in our balance fund. I mean, what's the sense? That's easy. But when you start to talk about million, 2 million, 3 million, all of a sudden now you're like, hey, I really want to be aggressive on this. Or people think differently too, where it's like, okay, I want this to be exactly how my other assets are invested. Some people say, you know what? I'm playing with house money right now. I got the deduction on the way in. I want to be super aggressive here more than my other assets. Or some people say, listen, I gave $1 million. I want to make sure there's $1 million in there next year when I go into the account, and we'll be super conservative. But when you get to higher tiers too, you start to look at things like alternative investments, which are very popular, right? These donor advised funds are tax exempt. We've seen so much private credit come in here and a lot of private equity funds that really it's great for the donor advised fund because they can take advantage of the upside without the taxation in between.
Wow, so that's really compelling when you're thinking about a family foundation. Obviously, there's reasons why you would want to start a family foundation over a DAF, which we'll cover in another episode. But you're telling me that if I contributed $1 million, $2 million, I could partner with Generation Capital or an independent Fidelity registered investment advisor, and I could build a custom crafted portfolio with my advisor to include alternative investments, maybe public stocks and bonds, private credit, and Fidelity will also assist me with giving those complex assets. That seems like a no-brainer.
It's great. I mean, it's the cool concept of being able to sell a really tough asset inside the donor advised fund tax-free and being able to use the proceeds to diversify, right? And all this is tax-free when it goes into the account. So tax deduction on the way in, tax-free growth inside, no additional tax consequence or penalties or implications on grants out. So to your point before, this is more like the easy version of giving. Like if you're just somebody that wants to give out to charity, the donor advised fund makes a lot of sense for folks like that because it's just low maintenance.
Even I tell folks with, administratively, with a high standard deduction right now, a lot of times, there may not be a tax advantage to giving, but if you're, what I call a spray and pray, might give, $50 donations or, a lot of donations in a single year. You don't have to write checks. You don't have to go on a credit card. You just go punch them into fidelity.com, click 2 buttons, and they go right out. So from an administrative point, the platform just makes it really easy to give, which as somebody who really enjoys giving personally, that's what it's all about. We want to make giving as easy as frictionless as possible.
Exactly. I mean, the ease of giving is important, and it's also just helping folks give the right asset because that's it's actually our 30% of the contributions we get in are cash, and it's mostly because of bad planning, right? Somebody that's called us after they've sold their company, after they've exercised their stock options, after they've sold their real estate holdings, and it's like, okay, now I have all this cash, which is fine, but there's better assets to do it with. So that's really the intersection is, okay, let's make your life easier on the giving side, but also let's give the right asset at the right time.
One of our mantras here at Generation Capital is we prevent people from making mistakes, and oftentimes that mistake is missing an opportunity because it's too late after the fact. So let's end the episode here. I think this has been hugely helpful for our listeners to understand the power of Fidelity Charitable. But I think one of the most unique value add components of Fidelity Charitable is the private donor group.
Mm-hmm.
Can you talk to me about what that service is for the high net worth donors that are customers of Fidelity Charitable?
Yes. So this is well, first of all, there is a barrier to entry. So folks have to have a $3 million or higher donor advised fund balance. And what this gives them access to is what I like to say, like a foundation staff without the cost. Okay. So this private donor group can do everything from philanthropic research, where a donor comes to us and says, hey, listen, I really want to find animal wildlife charities in New England that have been around for 10 years, that have at least $1 million of annual contributions and are focused on X, Y, and Z. We'll put together with a private donor group, basically a book report for that donor that compares and contrasts all the charities that fit in their models and can even run interference. I mean, we'll have a lot of folks that want to give anonymously, but want to give to a particular project or campaign at the charity, so we can act as that in between, all the way to things like family meetings and events. Our folks in the private donor group are all trained to facilitate family meetings, all centered around philanthropy. And then we'll do fun things like events for those donors, right? I mean, we do every year in April a next gen event in Boston for our successors to the existing private donor group. And it's 2-day workshop. Most of it is networking, right? It's mostly like 18 to 30-year-olds. And it's like, okay, first of all, like-minded people, they're all having the similar issues, but it's also bringing in experts to talk about things like, okay, you've inherited a $5 million donor advised fund. Your friend comes to you who just started a charity and says, hey, I'd love to get $250,000. How do you say no, right? Or how do you encourage them to grow with you? And those are the kind of things that they'll learn. And then we do, events for donor couples, like we had one in Park City a few months ago, where they got together and just idea share and learning from others. And we bring in industry experts. So I would say the value of the private donor group is the like-mindedness of our donors, right? A lot of our donors, which is the great part of Fidelity Charitable, is a lot of our donors have done a lot of creative work in so many different areas, right? So when somebody that says, hey, I'd really love to help with animal wildlife in New England, chances are we have 5 or 6 donors in New England that have already gone through this process in our private donor group, are very well versed, and have made the mistakes that we can help people avoid in the beginning. So that's the private donor group at a nutshell.
Yeah, and that's one of the reasons why I love the donor advised fund, is because it gives you a framework for giving. And that's something we work with our clients on a lot. If you're listening to this, you've probably heard of us talk about your family GPS, your guiding principle statement. If you're a wealthy individual, it's likely that you're getting hit up for charitable donations a lot. And it's important to have a framework around that. And that's something that we work with our clients on. And if you're in that Fidelity private donor group, you can obviously get direct access from industry experts and other like-minded individuals. Kyle, I think this has been extremely helpful to educate our listeners on Fidelity Charitable and the Donor Advised Fund. As we end every episode, the floor is yours. 60 seconds, 2 minutes on just a plug for Fidelity Charitable. Why Fidelity versus everybody else?
Yeah, I always like to tell folks that Fidelity Charitable, we've grown to our size, and really it's because we're the best option in the industry. I mean, you look at donor advised funds in America, there's like 1,000 different options. You get the same tax benefits everywhere. Why Fidelity Charitable? It's the cost, right? Lowest cost option in the industry, the ability to accept and monetize just about any asset that a donor would want to contribute. And then it's the ease of use, right? The technology is second to none. And our process is to get funds out of the account to your favorite charities so quickly. I know a lot of other donor advised funds take a while to do that. Our systems are so integrated and seamless with folks that we can get funds out really, really quickly. So Fidelity Charitable is not really the best because we're the biggest. We're the biggest because we're the best. And there is no joke about that.
I am totally in alignment with that. Thank you so much for being on this episode of the G360 Wealth Podcast. If our listeners want to set up some time with you, feel free to reach out to me directly. Be sure to like and subscribe and share this episode. And I hope everybody has a great day.
Thanks for listening to the G360 Wealth Podcast. If today's episode gave you something to think about or act on, share it with someone who might need it. Don't forget to hit subscribe so you're always in the loop. If you want to learn more about how we help families like yours simplify and grow their wealth, visit us at generationcapitaladvisors.com. Until next time, take care and keep building. The information covered and posted represents the views and opinions of the guests and does not necessarily represent the views or opinions of Generation Capital Advisors. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Investment advice offered through Integrated Partners, doing business as Generation Capital Advisors, a registered investment advisor. The information in this material is for general information only and is not intended to provide specific advice or recommendation for any individual. Integrated Partners does not provide legal, tax, or mortgage advice or services. Please consult your legal or tax advisor regarding your specific situation. All investing involves risk, including loss of principal. No strategy assures success or protects against loss.